Thank you, Nadine. Very happy to
Thank
be
you.
with you, everybody, and very happy to actually moderate this conversation with this fantastic panel. My name is Ayman Ismail, and I teach entrepreneurship at the American University in Cairo School of Business, and also the founder of AUC Venture Lab, our startup accelerator. And my relationship with fintech, I used to do consulting with banks for a long time ago, but then my relationship with the true fintech started about 2015. At AUC Venture Lab, we launched a fintech accelerator, and we've actually AUC Venture Lab in general, we've graduated more than 250 startups since then, raised more than $120 million in investments, more than 8,000 jobs. But I also got to meet a fantastic team, 3 entrepreneurs, Islam, Alan, and Mustafa. And you have Islam today, who actually, I got to know them at AUC at that time, and now they're building one of the most interesting startups in MENA. So very happy to have them with us, and happy to have also with us Yasmine, Otto, Sam, and Mo, and I'll introduce everybody in turn. So a little bit of context, and then we'll jump straight into the conversation. So what's happening in the MENA region? We're seeing a lot of change in this space, many drivers for change. Everybody knows we have a large, growing, young population that's very tech savvy and eager to get into the into digitization in general. But we also have a very low financial inclusion, low bank accounts, cards, acceptance, access to credit, whether consumers or SME. So it's actually a huge opportunity. We're seeing a rapid growth in connectivity. I will say in Egypt, we have more SIM cards than we have people. We're also seeing a lot of regulatory reforms that are coming from governments in the region, in Egypt, and in different parts of the countries in North Africa and the GCC. And that's leading to a huge wave of innovation in fintech, innovation that's coming from startups, innovation that's coming from incumbents, and innovation that's also coming, interesting enough, from banks, local companies, and global companies. So that's what we wanted to spend some of the time today with our fantastic panel, and trying to get their perspective on basically 2 things. What are you doing that's interesting, that you want to tell us about? And what are the trends that you're seeing, 1 or 2 major trends, interesting ideas that you're seeing that is coming that space? So let me start with our first panelist, Islam Shawky. Islam, the CEO and founder of Paymob, and he'll tell us more about the company. And Islam, Paymob is leading a lot of the digital payment space, acceptance, transformation in Egypt. Can you tell us a little bit, how fast is this space moving in MENA, in Egypt specifically, and in MENA, and where do you see it heading in the next 2-3 years?
So thank you, Ayman, for the great intro, and pleasure to be with our fellow panelists. So definitely we're seeing you across all of our platforms. I mean, at Paymob, we try to build the infrastructure for digital payments, starting from Egypt, and our aim is to do this regionally. So what we offer is that we have 2 sides of the business. The first side is a mobile wallet infrastructure that we give to mobile network operators and banks. And the other side is that we build omni-channel payment solutions for whether online or face-to-face transactions over the POS. So when we started our...
Is it just me, or are we offline?
No, Sam, I think Islam is speaking. We can hear you well. So you can all put on mute. And I think Islam was speaking and we can hear you. Go ahead.
So I was saying, when we started in our first deployment was in 2016. I mean, it was tough back then. Digitization wasn't that, and fintech wasn't a huge buzzword in the region like now. I mean, in terms of growth from 2016 till 2020, I mean, one of the metrics is transaction count. So we were doing in 2016 around 2,000 transactions, 2,500 transactions a day. Right now, we're doing more than 450,000 transactions. So I mean, there is 100x growth in terms of this metric. In terms of merchants, I mean, what the government has done and the central bank, they've done two initiatives for subsidizing of POSs. So there was the first 100,000, and in December they launched, or they renewed the initiative for additional 100,000. So in terms of merchant growth, we entered the year 2020 with around 1,000 merchants. We exited the year at more than 24,000 merchants, and we're adding around 10,000 merchants monthly right now, with the aim that we want to grow to closely 100,000 merchants by. Of course, huge things happened. One of them was the regulatory framework that changed, and the government and the central bank pushing for digitization, the launch of the local scheme, Visa, the regulation that made it very easy and simple to open a mobile wallet, especially using COVID. So that helped into the significant increase in the onboarding and the usage of the mobile wallets. And on the other side, the central bank initiatives and the payment facilitator license that the central bank issued, and we're one of the companies that are licensed there, helped, of course, with us onboarding merchants on this large scale. So, I mean, we see it growing, and we don't see that what happened in COVID is going to be undone. Like relying now on the digital fronts, whether it's an e-commerce website, or it's a Facebook shop, or a Shopify website. We've got all of this covered, and we see that this is going to continue. And we don't see that this is only Egypt. I mean, last Thursday, UAE issued the retail payment license. So we see that other countries and major economies in the GCC are working on this, and we're eyeing our regional expansion. We're applying for Saudi, and Pakistan, UAE would come next. So we're very optimistic, and we see a huge growth.
Fantastic. Thank you, Islam. Now, let me jump to Yasmine Helal. Yasmine is actually the new CEO for the Abu Dhabi Islamic Bank Consumer Finance. So ADIB is a bank that's present in the whole region. And now in Egypt, they're launching a new consumer finance. So Yasmine, you're launching that new corporate startup, which is very exciting. Why are the banks getting excited about digital lending solutions right now? What's happening in that space?
Okay, first of all, Ayman, I would like to thank you and all the members for having me here today. It's absolutely great pleasure to be with such iconic people on the same forum. We were in a meeting and with one of the companies, and they said ADIB is thinking in a very unconventional way. They're thinking as an entrepreneur. As you know, that we are starting a new company for consumer finance, as you said, and another sister company for microfinance. Even though ADIB had a department and had a portfolio of microfinancing, and they're upscaling it to an independent company. The idea of that, it's much faster, much easier, and there's a much bigger opportunity to run solely with that service into the market. When you move as an entire bank, you have a lot of regulations, you have a lot of stretches in order to move that forward. But when you are more focused and more centric on the service that you're offering, addressing the market with their needs, it's more dynamic, faster, and executable. That's my input on that point. Other than that, in particular, for the consumer finance itself, and that was a debate, how come we take the consumer financing where it is an added value service to the, for example, the cards or the small sized loans? What's the customer need? And more of the market opportunity. Not everyone would want to have a credit card. Not everyone would be eligible for a credit card, but everyone is eligible for a small loan for a certain tenor that's not eligible for an actual financing loan. Or even though if you are a customer who is eligible to be a loan or a finance customer, but you don't want a loan, you just want a short-term loan now for the service that you want or the purchase that you want. So in a nutshell, it's a matter of market acceptance. There's a lot that the market can accept, and there's a lot of use cases where you're more on the centricity on the customer experience and the needs of them.
I couldn't resist this question. You used to work in the central bank right before coming back to ADIB, and you were part of the team that was working on the digital transformation and fintech in Egypt. What's I know you don't speak on behalf of the central bank, but what's the mindset that you found inside the central bank today based on your experience?
Well,
sorry.
Thank you for the question. Yeah. Hi, Nadine.
I'm so sorry to cut the conversation, but I think Sam can't hear Ayman.
I think, Sam, you might want to log out and log in again. We can't hear.
Yeah.
Yes. So.
Yeah, if it's just possible for us to do that.
No,
for Sam.
Yeah.
Thank you, Nadine. Okay, go ahead, Yasmine.
No worries.
Sure. Thank you, Nadine. We'll wait for you, Sam. Don't worry. So basically, Ayman, thank you for the question. I was heading the role of head of strategy for fintech and innovation, and I've worked in the banking sector for 19 years into the commercial banking. Getting into the regulator side, it's definitely different. Different in regards of the amount of effort and endeavors that the government and the central banks trying to put on the ground to support this new era is tremendous. And a very good example is quoting Islam. Islam have mentioned many initiatives enabling the fintechs on the ground, how enabling the Visa project as a local association, not only on a prepaid card level, but also as a network for the mobile wallet. On top of that, the amount of focus that we have a department for fintech and innovation under the central bank, not to mention the amount of regulation sprints that were released during the COVID. March 2020 to June or September 2020, there has been a great transformation in regards of the regulation that were introduced into the market. A different mindset. Yesterday by itself, central bank was collaborating with the FRA, with DFS, with the British Embassy to roll an innovation sprint to matchmake the innovative and startups, fintech startups with the banks, with the problem statement that been faced on COVID. So starting October 2019, the banking and the financial sector problem statements has been put and summarized into 83 problem statements and narrowed down to by mid last year to the COVID. And with these problem statements, regulations and the rules have changed. Not only they've changed, the deployment of them have been set, and we can feel it now. We're being persuaded towards the digital, definitely.
That's fantastic and very interesting, actually, to see that mindset from actually an insider. Let me shift the conversation to a different direction. Otto. Otto Williams is the head of strategic partnerships for the CEMEA region at Visa. Otto, the payment landscape is being transformed in MENA, whether it's mobile wallets or new acceptance solutions. How is Visa enabling this new ecosystem? What kind of partnerships are you guys working on?
Ayman, thank you for the opportunity and for the organizers to be on this panel today. I think this is just a great session and very timely as well. And I think that's also a very relevant question. I see Ali Yusuf on this panel, Islam, Yasmine. It's just what they represent and some of the things that they've talked about, it just describes what we're seeing in the market and some of the engagements that we're having with partners to continue to drive this. We're seeing a few trends that we believe will continue to accelerate. One is the digital trend. We believe, as Visa, we actually expect and believe that digital will continue to accelerate. Cash has become a health issue for many consumers. They don't want to handle cash. They would rather go digital because that's it just feels more healthy to them. We did a survey here in the UAE, and over 75% of consumers will not, were hesitant to make purchases where contactless payments were not accepted. We're seeing the convenience factor. Consumers like the convenience of now being able to pay digitally. Why not? Why do you have to walk over to the ATM, collect cash, so you could walk to the restaurant to pay for your food and bring it back home, when you could actually do it, online, and it gets delivered to you in the comfort of your own home? So there's that convenience factor as well that we're seeing. So we expect digital to continue to accelerate. And what are we doing in this space? We are enabling e-com experiences. And so you've seen consumers and and suppliers have not been able to travel. And so you had to pay for things online, whether it's cross-border or domestic. And we're using various assets, whether it's CyberSource that enables gateway. Paymob does that quite well with merchants in market as well to enable Visa acceptance. Checkout.com, we've got a very strong partnership with them. They drive those experiences as well for e-com acceptance, both for merchants that have websites and for merchants that do not. Merchants that don't have website can actually generate a payment link, send it via WhatsApp or SMS, and consumers can complete those transactions. And so we're bringing capabilities, Visa network capabilities, to continue to power that. Contactless. You walk into a store, you tap your card or tap your phone. That's Visa tokens powering Samsung Pay or Apple Pay there, just to make sure that we have those touchless experiences. We've seen remittances, also go digital, because the agent cash out locations have not been open during COVID. And so now you've got to be able to deliver those funds digitally, both to a bank account, to a card, or to a mobile wallet. And we made an acquisition in Earthport to be able to enable delivery or terminations to millions of bank accounts. And so we're seeing digital accelerate, and we have all these enabling infrastructure and capabilities to continue to drive that. One other trend that we anticipate we'll continue to see is alternative credit accelerate. I think Yasmine spoke to that. It's micro lending. It's buy now, pay later. It's no, credit no longer is a credit card. Credit is installments on that merchant's website. And we've got our Visa installment platform that's powering that for many, many merchants globally. Credit now is micro lending. The consumer, their phone data is used to qualify them for a certain amount within a certain tenure, to use Yasmine's words there. And that's delightful to them. They can actually, do what they need to do there. And that creates demand in the economy. And if we're going to recover post-COVID, credit really needs to be available, both in, buy now, pay later credit, installment credit, micro lending credit for small businesses to be able to, drive working capital and replenish supplies. So we're bringing these capabilities. I'd say one more trend that we actually anticipate will accelerate is venture funding. It's actually interesting. 2020, many expected that would be the year that, bloodbath for fintechs and no fundraising. It turns out that was the second highest, venture funding year. $105 billion in investments. Quite a decent amount of that was for M&A and acquisitions. About north of $40 billion was specific venture funding in tech companies. And so we saw that's pretty significant. And here in the MENA region, MENA region was able to capture about $1 billion of that investment. There's real opportunity to capture more venture funding, especially here in the MENA region. And I gotta tell you, the things that drive that acceleration, it's been talked about here. Regulatory changes are very critical. Investors do not like uncertainty. And if you recall in the early days, when open banking, PSD2, and e-money licenses, rolled out in Europe, that's really when the fintech thing took off. Because investors felt more comfortable in putting money in those companies. Because no matter how great your solution is or how smart the founder is, if the regulator makes changes overnight, that business could either be successful or not. And so we're seeing changes happen here in our region, whether it's digital onboarding, eKYC, e-money licenses. It's happening across the MENA region. And we're working with regulators to bring credibility to the solutions of fintechs. And so Visa has rolled out Fintech Fast Track so that any fintech that wants to launch live in market can have access to Visa licenses, Visa network capabilities, and can scale, because we're in 200 countries. We've got credibility with regulators globally. And fintechs can use our platform and use the credibility of our platforms to launch in market. We've also, right now, we have a Visa Everywhere initiative where, we're inviting fintechs to participate. If you're a fintech, go online, visa.com, definitely apply for it. And what we do there is that, giving prices to fintechs, but also giving exposure to fintechs. We're going to live stream Visa Everywhere initiative this year on TechCrunch so that investors globally can see all of the good work that fintechs are doing across MENA and across our regions. And so, these are the things that Visa is doing to drive and accelerate these digital trends and empower fintechs to go to market quicker and at low cost as well. You don't have to build all of the stack from scratch, and to be able to scale to multiple markets at the same time while meeting regulatory requirements and having credibility with consumers and merchants.
Otto, this is fantastic. I think when the whole fintech movement started everywhere in the world, people were saying, well, the fintechs are going to be at odds competing with Visa, with the banks. And now we're starting to see a lot of integration in the value chains, a lot of complementarities, a lot of actually fintechs allowing the banks and the Visas of the world to get into spaces that they were not able to get into, and at the same time provide broader access to finance, access to credit, financial inclusion, which is something that we all care about. So this is interesting and fantastic. Until we get Sam back, let me ask Mo. And Mo, Ali Yusuf, very happy to have him with us. He's the regional manager at checkout.com. Mo, you guys have built a fantastic global platform. There is a growing need for payment solutions that transcend borders. And we've known that everywhere in the world, transactions that cut across borders are super expensive and they're hard to make. And you're trying to actually make this very seamless experience at checkout.com that is enabling companies to get into that. Can you tell us how checkout.com is building that seamless payment infrastructure across the region in MENA? What's happening there?
Yep. Thanks, Ayman, and thanks so much to all the team at for actually having me here. Really excited for the things that you guys are doing, for the support that you continue to provide to the whole MENA tech scene. I think just stepping back for a second, just quickly about checkout.com. So we've been committed to the MENA region for quite some time. We've actually been here since 2014, and we processed millions of transactions for some of the largest online businesses here. We see ourselves as a truly local player, meaning that we offer all of the relevant global payment schemes, Visa as well, obviously. And we also offer most of the relevant domestic payment schemes, wallets, Apple Pay and PayPal and those kinds of things. For example, we were the first to launch Apple Pay in Saudi for online payment way back in 2018. I say way back because in terms of fintech, it actually feels like a really long time ago now. So we've seen a tremendous amount of growth here in this part of the world. Our own business at Checkout in MENA has grown about 250%. We've had thousands of merchants who have really come to us now who really want to start to accept online payment. I think there's a couple of kind of trends behind that. One is that, as you kind of heard, there's been this perception that cash is dirty. And the other one, I think, is that in general, governments are very supportive in really pushing digital payments forward. So we've seen this massive shift. And then on kind of the supply side, you see merchants who are brand new to the online space. And there's a lot of kind of traditional businesses also who used to have a store, and like now they realize that they need to be able to serve a customer at all times through a phone, right? So there's this massive shift in the way that people typically shop here in this part of the world. So Checkout sees ourselves as a tech company who offers financial services. So what this means is that we want to make our cloud-based platform as sort of seamless as possible and really empowers our merchants and our businesses and our clients to really expand as easily and effortlessly as possible. So what this means is that we really take upon ourselves the complexity of scaling across geographies. So all of the underlying complexities around payments, which includes our licensing, currencies, trust, settlement, our regulatory frameworks, checkout, abstracts, all that. And all the merchant really has to worry about is having a single connection that really enables all the relevant payment methods in the market that they want to offer their products and services in. And then as a result of that, I think one of the trends that we really see now is that most of our merchants who may be set up in Dubai or Saudi or Cairo, for example, have realized that in order to be truly successful, they want to be a MENA-wide company, right? So they want to basically expand and offer their services across as many different markets as possible. And similarly, a lot of our major global clients have also realized that MENA is really the next growth engine of digital. And so there's a huge amount of players who are starting to contact us who might be processing with us in Singapore or London or in San Francisco, and they're actually telling us that, hey, we would actually love to serve the MENA customer. And then the great thing is that checkout provides a very seamless way for them to actually go about doing that. So by kind of offering a consistent payment stack without having them change the way that they actually work with us. The other kind of trend that we're really seeing is the topic of connected finance, which checkout really loves. So what this means is that our customers here in the region are really coming to us and saying, okay, so you're helping us collect all this money and all these payments. Now help us understand more from the actual data what this means. Who are the customers? What are some of the things that we should be considering about the kinds of purchases that they're making? What's the actual data telling us? And then the next step is, okay, so you've actually helped us collect the money. Now, can you as checkout actually help us pay out our other merchants or our suppliers or other businesses? So it's about getting money in, and then it's also about getting money out. So I think the is look at the world of rebuilt it from the bottom up. There's really a lot of simplified and really what business for a single partner to take as much of the financials down across global.
Mo, that's fantastic. I think one of the problems we have in many parts of the world is actually enabling the cross-border trade, enabling the cross-border payments and transactions, which is huge for everything from commerce to remittances, and actually having larger addressable markets for startups that are coming out of MENA. So let me get to Sam. Sam Shawky, who's the CEO of MagicCube. Sam, you're building a very exciting tech company. In most emerging markets, MENA as an example, the cost and limited spread of acceptance solution is a major constraint to financial inclusion and digital payments. How is MagicCube disrupting and changing that space? What are you guys doing? And how does it actually apply in the MENA region?
So unfortunately for connectivity problems, I missed some of the great conversations that I would have used to actually jump in, but knowing Visa very well, because they're one of my partners, one of my investors as well, knowing Islam and what he's doing. What we do basically with MagicCube is take the device that you are familiar with, the acceptance terminal, which is a very complex device. It's counterfeit resistant. It has multiple security chips in it. Believe it or not, it has a gold mesh under the keypad to prevent tampering. So it's a kind of, you raised our eyebrows. I like that reaction. My reaction as well. It sounded to me when I used to work at Visa like a 19th century idea. So the question became, can your phone do this? And the security guys came back and said, no, it's impossible. So what we started doing in 2014 was build the security platform that can be the future of payments. And in simple terms, we have created, patented, and it's unique to us, the ability to secure things in virtualization on the phone. So we took that and we went after these devices, which in my opinion should be doorstops soon, just like older cameras, fax machines. And we looked at a problem that we all in payments are familiar with. In the world, there's like probably 6 billion cards. Visa can correct me if I'm wrong. And only 60 million devices to accept them. So yes, developing markets, yes, even in developed markets, there is a bottleneck at the acceptance point. When people got excited a few years ago about mobile payments and Apple Pay, when I was at Visa, I used to say it's not exciting to pay, it's exciting to get paid. So we chose to use our technology to go and get rid of these devices. Think of it as how much, it's not really by replacing, it's by addition. Think of how many movies you watch today using streaming versus how many movies you watched when you drove to pick up a DVD or a VHS tape if you're as old as I am. So it's a huge difference. So just to give you an example, today the store has 1 or 2 typical devices. Imagine that during peak time, you can add 15 just to your employees' phones, so they can go in and take payments anywhere. Imagine you have a restaurant where people go and grab an Ingenico or Verifone device and come back to the table and borrow it from each other. Imagine having a cheap tablet on each table where you can order the food, tap your card, and actually pay. So the number I'm going to mention here, every time I put it on a slide deck, I think I added too many zeros. I have to go back and count them. But the world spends $48 billion a year on machines that are single purpose, that in our opinion need to disappear. So that's really what we're doing. We're getting these machines out of our way collectively.
And Sam, anything that you're actively doing in the MENA region or that you would plan or aspire to do?
One of what things we're doing, I have to ask for permission here on camera, but what's already published, he raised his hand. What's already published, by the way, we're not related, unfortunately, so we have similar last names. Everybody keeps asking. So we have launched already with Ariba Bank, which is active in Egypt, Lebanon, United Arab Emirates. We're really active in the region. CIB invested in us, which is already shows you our commitment to the region, and we're working hard in partnership with Visa, of course, on getting the into the MENA region, because I really believe I worked briefly for Orascom Telecom when we sold the business, and I think there's a chance in the Middle East where we leapfrog even Europe, just because we don't have the installed base, and I think. Islam is going to be one of the major players doing that.
I think this is fantastic, and I like the idea of leapfrogging because there's a huge market, huge opportunity, and something that we can all get into, and it makes people's lives better, makes the economies grow faster, and offers opportunities for better opportunities for people. I think just in putting things in perspective, in conclusion, after all of those insights, what we're seeing in the region is a huge transformation. There's a lot of digitalization that's happening, but in the financial space specifically, there's a lot that's happening in getting more people access to banks, access to credit, access to cards, and access to new methods that did not exist before, in getting small and medium enterprises access to acceptance solution, getting paid, as Sam was mentioning. And I think that's happening right now. What I'm seeing is probably 3 different waves. Payments is heating up in the region. We're seeing a lot of interest from all players in the payments. And I think it's maybe, as Otto was talking, we might be seeing some consolidation in that space, even though people are opening opportunities. The second wave I see is around lending. And I think that's just about to pick up right now, whether consumer lending, SME lending, and that's a huge market demand that is out there. And it will sit on top of those digital payment platforms that are just going to literally explode once we start getting the lending part. The third part, which is getting me exciting, but I've not seen many people looking at it, is the investment space. that's a huge open space that I see now as a blue ocean. Very few people are getting into it. We're seeing a ton of wealth coming from people, small and medium enterprises, individuals forming and growing middle class that is looking for things to do with their money other than just putting it in a bank account, earning some interest or buying some real estate somewhere. So I think that's a huge opportunity. If you look at these, we're starting to see investments flowing, some of them from the region, but I liked what others in the previous panels were saying. We're seeing a lot of global investments also coming in, and probably, hopefully, Islam will talk about that and another day, not today, but we're starting to see fantastic investments. So thank you so much, guys. This has been a great panel. So thank you, Islam, Paymob. Thank you, Yasmine, ADIB. Thank you, Otto from Visa. Thank you, Mo, checkout.com. And thank you so much, Sam from MagicCube. And thank you for Techwadi for the fantastic opportunity. And we conclude our panel.
Thanks, Ayman. Thanks, everybody.
Thank you so much.
Pleasure talking to you, Go.